Nigeria, Africa's largest economy, has faced significant economic challenges in recent years, including high inflation rate and declining oil prices. Well, against this backdrop, President Tinubu has been spearheading a series of ambitious reforms aimed at revitalizing the Nigerian economy and setting it on the path towards sustainable growth. These reforms, which are backed by a broader economic recovery plan, represents a critical moment in Nigeria's economic trajectory. Let's get talking. I'm being joined by the founder and chief consultant, B. Adedipe Associates Limited, Dr. Biodun Adedipe. He joins live from the United Kingdom today, not here in Nigeria. Thank you. It's good to have you on the program.
Thank you very much, Tolu. It's my pleasure to be with you today.
Thank you so much for squeezing out your time in your tight schedule. Let's get to business very quickly. A lot is happening, and should I say, everyone seems to be commending government now to a level. The dollar thing, the dollar naira rate, we see that there is a reversal, and many believe that this might be sustained. But my question to you really would be, considering the impact of the ongoing reforms, when do you likely see recovery? When do you likely see us bouncing back? Inflation is still 31.97%. Even IMF is saying that inflation will drop faster than expected in 2024. I'd like you to react to all of these issues and let's know your views with regards to them.
All right, thank you so very much. I think first I will come from the perspective of the world recovery. Now, we talk about recovery in a situation where an economy is actually not growing at all. Unless one is straight in context of recovery from the disruptions that were caused by the reforms announced by the present government when they came into the office last year. Now, if you put that in context, therefore, then first thing to note is that the Nigerian economy is growing, no doubt, all right? Secondly, is that it is growing faster than the rate of growth of our population. Most analysts don't make reference to that, which means it's in a positive territory to start with. Then we now come to those reforms and then look at the initial disruption they brought to the cost of doing business, the cost of living, and general social, relationships and activities, and then come to where we are today. And I will situate that in a very simple context for everyone to understand. First is that we all know fully well that by the nature of our economy, largely import dependent, of course, for both oil and non-oil commodities. That has been the pattern in the last few decades, especially in the last 3 decades. Now, some of what has happened recently is pointing in a new direction. The first, as you rightly said, that Naira is gaining value, and in my own estimation, it is sustainable. And why do I say sustainable? It's again in the mix of these reforms and what they are bringing on the table. The first is the fact that by nature, almost every economic agent in Nigeria is sensitive to the exchange value of the Naira, which was what we observed when the unified exchange rate policy was announced by the current administration, that every price you can think of in Nigeria went up. Of course, we see inflation rate at the high level of 31.7%, latest available official data. Now, that given, the rate has started coming down in the sense that Naira is gaining strength. Why do I say it is sustainable? First is to recognize why it happened. The first major plank of that was the 600 basis points increase in the monetary policy rate by the central bank. Yes, ultimate target is to fight inflation by reducing liquidity, but it served a very good purpose at the same time by making Naira-denominated assets attractive to investors. So a lot of money went into those assets. So, and that did one thing. First is to reduce liquidity in the system. The latest figures we saw that in the last 3 days thereabout, the estimate is over 7 trillion Naira that the CBN with that markup of NPR has been able to take out of the market into Naira-denominated assets on the one side. The other side is that those Naira assets became interesting to what I would describe as diaspora investors and foreign portfolio investors who also invested massively those Naira assets. But their investment came in as dollars. Okay? So that increased dollar liquidity in the market. Now, beyond that also, there is now what I call the second major development that is also positive, and that is bringing transparency and accountability into activities of our deposit money banks on the one hand, and then the plank of grow the change, all right? 4,173 licenses revoked. That brought some bit of sanity in that sector to start with. Then secondly, any transaction they do now has to be documented, not in terms of hard documents, so to say, but if you are doing a transaction with them, you must give your name, you must give your PVN, and of course, there's a support of your other documents like the national passport as evidence of who you are. And of course, on the other hand, you also have your ticket if you are traveling, what you are buying the FS for, so to travel. But basically, that has brought some sanity, which underscores one fact in Nigeria that oftentimes what we record as economic problems are largely social in nature. It's about our attitude and conduct, sharp practices, and corrupt behavior. Now, if you are able to eliminate that by actually straightening out the financial system, that eliminates opportunity for what we might call criminal speculation, and of course, other sharp practices within that market. That has also happened. So with that one, there's some measure of sanity within the space. Now, when you take all of this together, they point to chances of sustainability. The other side to it is that Dangote refinery has started operating now. Why is that also important in the Naira-dollar exchange value, nexus? And this is the way it goes. Up until 2023 end, Nigeria's merchandise trade, about 39.1% of our imports was refined petroleum products. Okay? So in which case, if we begin to source that locally from Dangote refinery and maybe also what I called, Warri, Kaduna kick into operation and a few modular refineries as well, it means that much percentage that drives the demand for FX will be out of the equation. And then we now come to the other side, which is if Dangote refinery is now operating and delivering diesel, that's AGO, to the local market, with the prospect of doing PMS and other forms of petroleum products in May, what does that mean in terms of importation of feedstock? If we can produce enough locally and NNPC can supply enough to Dangote refinery, then Dangote also as an entity will not need to demand for dollars to import crude. That's also very, very important to put into this conversation. So when you put it all together, then it means there's a possibility that we can sustain the current gains the Naira is recording. If that happens, then the influence of that in the inflation rate, of course, will be taken out. Of course, there's the lag effect. But that's another thing most people are saying, oh, we see Naira gain value, but the price of commodities have not come down. There's always the lag effect. Because if I bought, for example, the stock I have in my shop at the rate of 1,000, let's say 600 Naira to the dollar, and I still have that stock in my shop, you won't expect me to sell at a price lower so that I won't be able to recoup my investment. I would rather just sell the old stock at the old price. So the prevailing price in the market will reflect the old rate at which I bought the stock. But when that stock is exhausted and I replace with cheaper stock as a result of the gain in value by the Naira, then my buyers can begin to expect a drop in my selling prices. All right? So we may not see the immediate effect of that on inflation, but it may be May, June, July going forward. So in which case, the reforms are bringing reprieve in terms of the exchange value of the Naira. That's number one. Eventually, we also bring reprieve in terms of inflation rate. But equally, we look at the other side, which of course we discussed at the second segment of today's program, and that is what is happening in the agricultural space. Because that's another major issue that is big in our inflation numbers. All right, that's full inflation. Now, if we take also what the government is doing in that regard, then we see, like I said earlier on, a combination of those issues relating to monetary policy and now also intervention in the agri space, whether in terms of security or in terms of infrastructure for processing and also for storage that can bring improvement within that space. So all of this will feature in moderating the inflation rate from where we are now to what we may expect at a lower level going forward. I think the other thing I want to mention now before I stop is the fact that the major other element is that with those reforms, what gets into the financial account has increased significantly. So when allocations are therefore made to the federal, state, and local government, is a much larger figures than we have seen historically. So the question then will be, what are the fiscal authorities doing to ensure that when they spend this increased allocation they receive, that it is to drive productivity and not just to pay expenses that are oftentimes frivolous. In which case, the question we should be asking then, not only at the federal level, but at the subnational level, what are our government doing with the increased federal allocations? If a lot of that money is going into infrastructure renewal, then we are going in the right direction, because infrastructure is an enabler of economic activities, and we end up improving productivity. So that is the leg that we should look at. So what is the government doing with respect to infrastructure? So and then, are they delivering at the federal, the state, and local government level? So those are the issues for us. But the reforms are bringing results that are positive. And I see that going forward also, the rest of the year, making Nigeria more conducive for living and also more conducive for doing business.
Interesting. I want to be take you on purchasing power of Nigerians, because that is the issue right now. We are grappling with hike in the price of PMS, and just recently you're aware that there's a 300% increase in electricity tariff. So now let's now look at the people for band A customers or band A users. Now let's look at the purchasing power of the people that is yet to improve. Even the minimum wage, we're yet to hear from government. So how can we address this shortfall, cushioning the effect directly?
Okay, thank you so very much. Yes, no doubt, a 300% increase in electricity tariff for band A of consumers will bring an increase in cost of living, no doubt. Therefore, businesses that fall also within that band, the cost of the business, there's no doubt. But the question for us is this: how do we deal with that effect? Most analysts talk about the pass-through effect, that, if it's a company, it will pass the cost to its own customers. That is the typical thinking. But that will also be an assumption that the product of that particular, entity, if you use one just to illustrate, I won't mention any name, okay? You are making an assumption that that product is, let me take the two extremes, price elastic or not price elastic. Now, what does it mean for demand of price elastic? I want to make it simple for viewers who are not professional economists. It simply means that if the price of a product increases, the natural tendency is for consumers to buy less of that product. If they do, then we talk about price that consumers are reacting to the price. We call it consumer resistance. But if whichever level the price goes to, people will still buy. And it means that particular producer can pass through the increased cost of electricity to its consumers. Anyhow, maybe pass through the entire 100%. Or perhaps even do what we experienced when Naira was losing value, where most, sellers marked up their selling prices by more than the rate at which the Naira depreciated at the time. So that can also happen in this instance. So the question now is the nature of the product of a particular seller will determine whether consumers will resist an increase in price or not. If it's an essential, chances of resistance very minimal. And that is when you now begin to talk about the purchasing power and the capacity of the consumers to spend on that item. Now, if it's the other way around, that means that increase in cost will sit with that company. In which case, they have to become more strategic. How do we now grow revenue in a situation where our consumers are resisting price increase? In which case, they have to find a way to sell more. And that brings me back to the big question. What we are talking about today in terms of tariff, for me, is a wrong place to start. Some 9 years ago, when President Buhari was coming to office, one of the APC chieftains approached me and said, okay, doctor, what would you want President Buhari to tell Nigerians in his inauguration speech? And I said, well, I'll give you a one-page bullet point. One of the key things I emphasized for the power sector was this, that if we are going to change the game, it's not about tariff. It's about ensuring that every consumer is metered. Once every consumer is metered, that means I will pay for only what I consume. It also means the discos and every other player within the power value chain will only receive payment from me for what they deliver. So if they don't deliver enough, then their revenue will match what they deliver. I said, if you do that, it's a master stroke. Meter every consumer. What I will do now is that all the players in the value chain will get less than they've been collecting. All right? And what that happens, they will look back to the entire value chain. How do the generating company, the GenCos, generate more power? How do we then align the stock capacity of 40,000 megawatts with about 4,000 megawatts that we currently distribute? So then we have to sit back and think, what do we need to do to increase delivery beyond what we do now, and to match the stock capacity that we have? If they do that, they make more money. So that's the way every business will run. But the business model they run now is they get money for what they do not deliver. So increasing tariff for me is not necessarily the right approach, because that is looking at the influence of exchange value of the naira on the inputs into the process that make them now say, okay, we are pricing gas upwards at $2.18, per cubic meter. If you price that way, it becomes more expensive. That's what led to this tariff increase. But that is just by the way, because that alone is not enough to bring the investors into that value chain. So for me, the critical element where the government should put emphasis is to ensure that every consumer is metered. Once that is done, the issue of privatizing the power sector, we've been agonizing on for almost 15 years now, will no longer be an issue of agony. It will now be a business case for them. How do we make money? And then we think about ensuring power is delivered to all the metered consumers. That's my response to it. But there's nothing we can do right now. The reality is that the reforms, yes, brought increase in cost. Of course, like I said at the beginning, cost of living, cost of doing business. So everyone, we have to now reorder priorities. Of course, that also means that the power I receive, if they really deliver power, I will then ask myself, how best should I use this power? Should I leave all the lights in my house on, or turn them off as soon as I exit a particular space? And also consideration will come from the side of the consumer. That's prioritizing. So, but also let me drop this point before I stop on this. The government must not shy away from providing subsidy for energy. It's a global phenomenon. So we should not allow any advice coming from any quarters to make us say we want to remove subsidy from electricity. It is not the way to go if you want a society where you not only have some measure of peace that can support development. That is the way I would put it.
Good. Let's now move to talking about the plan to recapitalize the banks. Yes, because despite the figures we are seeing, the banks look pretty well. And even international ratings agencies will say Nigerian banks are stable. I think that's it. But you know better than we do. What do you make of that effort of government of central bank, sorry, trying to recapitalize the bank. I think the focus is to get to $1 trillion economy. How does this come to you?
For me, it's a step to take, and it's the right direction. And my reason is very simple. When we did a similar thing in 2004, July, I made a comment that yes, moving from 2 billion naira to 25 billion naira capital, which of course resulted in a drop in the number of deposit money banks from 89 to 25 at the time. But if you look back today and see what transpired, yes, it meant we saw mergers and acquisitions, variously, some business combinations of straight bedfellows that produced now ultimately a bank that was weak and needed support and so on and so forth. Now, where we are today, in reality, if you take the exchange value of the naira at that time and convert that 25 billion naira to the USD, and you now look at what is required today to match that USD and convert to naira using the current exchange rate, that will give you a fair idea of the kind of level of capitalization that our banks will have. And I think also within that context, when the Central Bank of Nigeria said that, look, what we want is cash injection. You cannot capitalize your reserves to meet this requirement. So in which case, it's not about shareholders' funds or equity. It's about paid off share capital. Now that will serve two major purposes that most analysts are probably not looking at. They are looking at only one. They are looking at the fact that, oh, this will help in terms of, yes, bringing in a lot of inflows. In fact, one of the banks that first responded to this, and now that we want to now raise $1.5 billion US as fresh capital. Good idea. Which case, it may likely also enhance dollar liquidity. But the other side to it is that such a huge figure that amounts to a deficit at the current position of the banks of 4.2 trillion naira will be massive withdrawal of liquidity from the economy now into the banking system, and therefore under the purview and some measure of control by the central bank through the reserve requirements. Okay, so if you look at it from that perspective, it's serving two major purposes. Yes, to make the bank stronger, all right, but at the same time bring in inflows of dollars for liquidity and also reduce naira liquidity in the domestic economy. So it's a policy in the right direction. And of course, like I also remind people, banks don't lend out of capital. Rather, capital is a motivator of growth. In which case, if they are able to now recapitalize, that will trigger a new spate of growth in the Nigerian banking system. And with the capacity, therefore, to fund growth, then they will align with the vision of growing the Nigerian economy to $1 trillion a few years down the line. So that's my interpretation of it. It's a good thing for us.
Now, almost finally, sustaining this positive move is what everyone is also talking about. In your understanding, now, what I've asked earlier, but I just want to follow up saying,
yes,
what more will be done to complement, because you're talking about food security, that's what I want to speak about my second guest is even stuck in traffic, so I'm going to take you on a bit on that. Food security, which you mentioned, we've seen the central bank intervening with fertilizers in recent times, and some will say, no, the central bank should just focus on maintaining monetary policy and the currency and all of that. But what sort of intervention are you expecting more to support agriculture, which would help address this inflation that we're talking about, reigning on inflation? So what can government do? Any quick wins for the agricultural space?
Well, they are quite obvious, I will say. Now, let me also put it in context that the release of fertilizer by central bank is coming from the last regime, not the current management of the bank. It is fund already committed by the former leadership of central bank into acquisition of fertilizer that they released. In which case, whatever is in our hand as direct intervention, we want to clean it out and ensure we are now facing our mandate as central bank. And that is what we commonly call in central banking inflation targeting. Now, when it comes to food security, you remember I said earlier on that that's the major headache of Nigeria now, and that began some 7 good years ago, when I sounded a warning in January 2017 that if we did not address the security issues confronting us that was making farmers to run away from their farms, we will likely see food inflation become a major problem for Nigeria. And it has been like that now the last 3 to 4 years. So how do we deal with that? Then we go back to where we were in the late 60s, early 70s, or late 70s, let me say. It was when we got into early 80s that we began to have problems with massive importation of rice. And then, of course, agriculture in Nigeria became, relegated to the background. 3 key things here. Number 1 is we don't do all-year farming. Most of the farming we do in Nigeria is still rain-fed. So if we are going to do year-round farming, it means intervention has to also come in the area of irrigation, all right? Which means wherever we can cultivate, there'll be deliberate infrastructure investment in that particular area. On the one hand, where government can, and then on the other hand, providing incentives for private investors to go into that. So if we are able to do that, then our agriculture will transition from rain-fed cultivation to year-round cultivation. That's number 1. Secondly, from the data available, we understand that 60% of our agri output in Nigeria goes into post-harvest losses. So how do we prevent post-harvest losses of up to 60% of the output? And that's quite significant. That brings in the other 2 legs of what I will recommend here. The first is we need to invest more in storage facilities. Again, I will recommend what I just said now about irrigation system. And that is where government has capacity, let them do what they can. And where we cannot do much as is required to achieve our objective of reducing to the barest minimum post-harvest losses, then we need to create a model that will attract private investment into that sector. Then the third one, of course, will be processing. And of course, Nigeria is already gaining traction in that regard, in which case, are there manufacturing entities that government can deliberately go to invite and also offer deliberate incentives to come set up their processing plants in Nigeria for important items of our consumption in Nigeria. Now, it's a thing of note and, a positive one about tomato processing, by a foreign government that set up, I think, in Kebbi State or so, that was inaugurated recently. Now, it is that kind of thing I want to encourage government to do. You won't wait for the investors to come. You go after them. They offer them incentives to come here and process. So the combination of those 2 will help to reduce what I call post-harvest losses. The other element then is what we all talk about, and that's security. We need to then improve security. If we're able to do those 4, we can bring the back of food inflation. And then, of course, begin now to see improvement also in, living in Nigeria. Basically, it is still oil theft, in my own estimation, because if you look back in the last 1 year, or let me say 14 months, 1 year and 2 months, that's from February last year, between then and early this year, we succeeded in ramping up output of crude oil. And then suddenly, we saw a nosedive that took us first to the point where Angola overtook us at a point. We regained the leadership position, and now it's Libya by a few thousands of barrels of crude oil. What that speaks to us is that what we did in 2023 that resulted in increase in output, we have not been able to sustain it. So, and then the question will be for us, whatever we did, can we do a repeat? What can be done in order to reduce oil theft? In which case, it has to go beyond what, in my own estimation, we do currently. If we are going to succeed with that, we must embrace technology. There's contemporary technology that can help Nigeria to significantly reduce oil theft. We must be honest with ourselves and embrace that technology and deploy it. Yes, of course, it's available quite all right. It's being used in other countries. Why can't we also invest in it and honestly deal with that issue? We are in a very good position to increase our dollar inflows from the sale of crude oil, because the price of body light, as of yesterday when I checked on our website, was above $95 per barrel for Nigeria's body light. Now, if therefore we also ramp up production, then we can generate more from that, and at the same time also be in a position to supply the domestic refineries. So on both sides, it will be a win-win for Nigeria. So that means that is a major area we need to pay attention to. In fact, what we said earlier on about sustainability of the gains in exchange value of the naira comes mostly from that sector supporting all the other things that Central Bank of Nigeria has done. With KCBN is pulling in the right direction. So if we sustain that, then we must ensure that we also deal with the issue of oil production and export. Very critical.
This seems it's so interesting. Now let's finalize now with business owners that have had projections before now. Dr. Adedipe, how would you, are we to go re-strategize, go back to the table to work out our figures? Because everything is going to change. Price of PMS has changed. Electricity tariff was also on the high side. So what happens to business owners? What will you advise them to do to manage the situation at this time?
Thank you so very much. You are just spot on in terms of running a business. Now, the ideal team, we've gone through the first quarter of this year.
Yes.
Ideally, you return to the strategic desk and then ask yourself, what has changed? Now, a number of variables have changed in what we looked at the beginning of this year. We did not look at the time. We had different opinions about where the naira exchange value will get to on the average for the rest of the year. So that went into planning for companies and organizations that have foreign input or content in their business operations. That was on the one side. Then in terms of dealing with price, we also looked at the inputs in that regard. What was the price we budgeted for in terms of AGO, that is diesel? Now, if that price is also coming out, that means there's some gain in that regard. Because from what, Aliko Dangote said a couple of days ago, that if AGO is coming out of his refinery at 1,250, then we expect marketers will eventually put it out at least at a price much lower than what we budgeted in the plan for this year. So that is some gain, all right? Now, for the portion that relies also on PMS, hopefully from May, we see a similar improvement in the price. That will bring some gains. So what you are playing out therefore against each other will be the gains, because talking about energy alone, you're talking about AGO, you're talking about now PMS, and also now electricity. So the cost of electricity, of course, will go up, given what we said earlier on. But the prices of other energy items, PMS, AGO, will come down. So if that happens, that means you have to rework your numbers, to start with. And then how will that affect your selling price? Then how will that play out in terms of the volume? So it is a time for every serious organization, whether profit-seeking or not for profit, to return to the planning desk and rework their numbers for the year. And then going forward, where do we expect exchange rate of the naira to go? Like I said earlier on, if we see what is happening now sustainable, then we expect improvement in the exchange value of the naira in the rest of the year. If that happens also, how does that play out in the numbers we are projecting? So it's a time for us to look at everything all over and then redesign our strategic initiatives that we now adopt for the rest of the year. Still keeping our goals on what we set for ourselves to achieve. Maybe for some entities, they will have to reward their goals and become more aggressive. Because, usually in strategic planning, we talk about 3 scenarios: best case, worst case, and then most likely. Okay, so for most of them, what they probably saw as worst case was what they pushed forward for 2024. Then with these changes coming that are positive, maybe they should migrate from worst case to most likely, and possibly even begin to look at goals they have under their best case scenario. So that is what I think every organization in Nigeria should be doing right now.
It's a big one. I must thank you so much, Dr. Biodun Adedikpe, for making us understand all of this, joining us live from the United Kingdom. Founder, Chief Consultant, B. Adedikpe Associates Limited. Do enjoy the rest of your day.